We have a minute. Shall we? Very good evening to everybody. Friends, today's meeting, so obviously we start our new year with our Satyanarayan Puja, which we finished some while ago today. And now we have our first lecture meeting and the first event for the new year, which is the 75th year. We've entered the 75th year of BCS. And we are very grateful to CA Nawshir Mirza ji for accepting our invitation to honor us with this first event. We do that before, so it goes well in the end. So, friends, to start with, we had our founding day lecture, the 75th founding day lecture on the 6th of July. And I think our chief guest that day, Mr. Sajjan Jindal, clearly spelled out that professionals play a very important role in corporate governance. And here we have our first lecture meeting on role of professionals in governance. Corporate governance is an compass that guides companies towards transparency, accountability, and ethical practices. In the Indian context, it's a multifaceted concept that sets the stage for a thriving business ecosystem. Chartered accountants are essentially contributors to governance across sector, including corporate, financial, public sector governance, and others. With their expertise in financial management, accounting, auditing, and regulatory compliances, they play a very crucial role in governance framework. Some of the key attributes of governance where professional can play a vital role is one, I believe, is the enhancing the financial reporting and transparency. Chartered accountants do ensure accuracy and transparency of financial reporting, a cornerstone of effective governance. They prepare and audit the financial statements, ensuring compliance with accounting standards and regulations. By providing reliable financial information, they empower the stakeholders to make a well-informed decision. Assessing and managing the financial risk, another element of corporate governance where we play an important role. We analyze financial risk and develop strategies to manage them effectively. By evaluating our risk exposures, we assist organizations in maintaining stability and preventing financial crisis. Another element where we play a vital role is ensuring compliance with regulations. Our guidance enables organizations to follow ethical practices and avoid non-compliances, contributing to a good governance. Establishing a robust internal control system. Strong internal control system fosters transparency, accountability within an organization. Conducting audit and providing assurance, one of the another field where chartered accountants play a critical role. Chartered accountant conducts independent audits to verify the accuracy and fairness of the financial statement, thereby ensuring accountability and upholding stakeholders' trust. In summary, chartered accountants bring their financial expertise, ethical standards, and regulatory knowledge to governance processes. By ensuring transparency, compliance, and accountability, we make a significant contribution to effective governance, enabling organizations to build trust and maintain sustainability operations. Friends, with this, we have today's session on. Well, we have a lot of participants online, more than I think 150 to 100. So for the benefit of those who are not members of BCS today, I would like to explain something about BCS and one of our mega events for the 75th year, which we are planning. BCS, Bombay Chartered Accountants Society, is India's largest and oldest voluntary professional body of chartered accountants. With a membership and journal membership exceeding 10,500 individuals, widespread presence in more than 250 cities and towns in India. BCS has been unwavering in its commitments towards development of profession since 1949. BCS core mission is to provide its member with extensive opportunity for growth and advancements through a multifaceted approach encompassing learning events, research publication, advocacy, networking, and community initiatives. By operating as a not-for-profit organization, BCS relies on dedicated efforts of hundreds of volunteers who selflessly contribute their time and expertise while upholding shared value and professional ethics. Friends, with this, I would also like to introduce you to the 75th year mega event, which we've termed as Reimagine, which is on January 4th, 5th, and 6th of 2024 at Geo World Center, BKC. And this event is more about future. We have various different kind of topics to analyze: one world, one tax, how capital markets will play, technology playing a critical role, startups, how startups journey and what are professionals' roles in startup. Various different kind of sessions have been planned for that event, and definitely the registrations are open, and we would request a maximum of them to take the benefit of the early bird pricing and register in numbers. So with this, I would hand over to Anand to definitely introduce Nawshir Bhai. Obviously, the topic is very serious, but when I interacted with Nawshir Bhai, he is really a very jolly person from within, very humorous. And so let's see how he takes us this topic of governance, which is quite serious, into his own manner. Thank you. And I will request Anand Bhai to introduce it.
Good evening. Warm welcome. Thank you, Chirag Bhai. Pleasant task of introducing CA Nawshir Mirza. Sir is a fellow of the Institute of Chartered Accountants of India. He was with S.R. Bartley Boy from 1967, much before I was born, till his quote-unquote early retirement in 2003 with Kolkata, Bombay, and London offices. He represents as an independent director on the board of Thermax Limited. And since 1999, he has been serving as independent director on boards of various companies, including the Tata Group, Mphasis, Exide, etc. He strongly believes that humankind should take responsibility for destruction of the natural world. An interesting profile note that I wanted to share. And Mr. Nawshir is also on the board of the Energy Resources Institute, amongst various of the professional associations that he works with. Sir, thank you for gracing this occasion. Before we begin, a small memento, sir, as a token of our appreciation even before we begin. Chirag Bhai, please. Sir, over to you, whatever you prefer, sitting or standing.
Good evening, friends. For a bunch of auditors, you people are very trusting. You clap before I speak. You even give me my memento before I spoke. I would never do a thing like this. It's more important for the online people. Okay. Thank you very much. And I want to thank you, Mr. President, for having invited me to speak today, because as he said, it's a very significant evening today. It's the first event which he is chairing as the president of the society. And more importantly, it's the first event of our 75th year. So there is a tremendous significance. And so it's great honor you do to me by inviting me to this event and giving me the opportunity of sharing my thoughts. Because in the life of an institution like our society, an event chronologically determined, like the 75th year, gives you an opportunity to reflect back on the past, and with that reflection, to look into the future. And when we reflect back on the past, sir, we contemplate on our successes, and we also contemplate upon what we could have done better. And we use all of that to look into the future. And this is a tremendous opportunity, which only comes on occasions like these, when you can look into the distant future, mostly beginning of a normal year. You would look at what will I do over the next 365 days, and then my successor can bother about what happens from the 366th day. But on an occasion like this, you can look 10 years into the future and say, what would we like today as the first day of that society we want to be in 2033 or whatever period you look. So I think it's a historic moment. We are on the threshold of a long change. And the topic you have selected for this evening, in fact, reflects that thinking. because there is a certain amount of looking to the past and substantially looking to the future. Now, we are a body of professional accountants. There are other professions also that deal with the business sector. And broadly, what I will speak about is, while there will be a greater emphasis on us as accountants, it could equally apply to any professional individual in dealing with the corporate world, meaning lawyers and whoever else. Now, if I look to the past, what is the hallmark of a professional? Because why are we talking about professionals in the world of corporate governance in particular? After all, there are others who can have a role. So why in particular professionals? I think the typical hallmarks of any professional, and certainly the profession we belong to, is competence. We have a license which tells that this individual is competent to do what he is claiming to do. More importantly, I think we give a clear impression of being objective, and as part of the objectivity, or more important than objectivity, of being independent, that we stand apart from any particular interest and are able to convey our views unvarnished by any personal interest or prejudice. So we have that particular advantage of being a professional. Indeed, we are viewed as ethical, though we have nowadays too many stories in the papers about some of our colleagues who are somewhat trespassing beyond these boundaries. But that is this tiny minority. I think still our profession, and that's true, I think, of all of us here in this room and on the Zoom call, are people who have stood by their ethics and practiced their ethics. It is not only for public posturing. And of course, this also gives us the advantage of being good communicators, the ability to persuade, because as a professional, one of the principal roles you play is to use your influence to persuade your client to do what is right and avoid doing what is not right. So many of us might sometimes succumb to suggesting things that are not right, and I know there are individuals who do that, but by far the majority of us as professionals use our good communication skills, our stature, our image in the eyes of our client and of society to show them the right path rather than the wrong one. And we use, as I said, broadly, we use a lot of influence in doing that. We don't always use authority, because many times our role, we don't come with authority. Sometimes we do as an auditor, but even as an auditor, and I was an auditor for nearly 4 decades, I think most of what I did was not by saying, according to section so-and-so, I have the power to do this or that. Inevitably, it was because the client respected what I was suggesting, or more than suggesting, rather pressing the client to do, and they did it. So the ability to influence our clients is something we as professionals possess, which may not be true of many other people. If we wanted to influence our clients now in the world of governance, and I will move to governance in a few minutes, I would say we should focus upon the professed vision, mission of the client, because all clients tend to put on their walls their values, their vision, their mission, and those are always good sounding phrases and sentences. This is when you must use those to persuade the client to live by his own precepts, or at least his own professed precepts. Whether they are his own precepts is another matter. So this is one useful tool that I have also used in the past, saying, look, if you do this, you will be able to actually claim what you have put onto the in the reception area of our office. Inevitably focus on the long term, because you're talking about people changing. And so you must focus upon the long term rather than the immediate future. As Gandhi said, and I quote from Gandhi, create or find an opportunity for expulsuation. What is expulsuation? The ability to dispute with somebody, your interlocutor, dispute or argue or convince your interlocutor to a different point of view from the one he might be holding. So look for an opportunity. If an opportunity doesn't come, try and create an opportunity. So if you do these things, you as a professional, whatever you may be a tax advisor, you may be a management consultant, and of course you may be an auditor. You can introduce the topic of improving governance in an organization. So now I move on to governance, because I don't think I need to speak to this audience on professionalism. That is what we are. It's in our blood. But governance is, there are two ways of looking at governance. One is, of course, compliance. And today, pure compliance itself is a significant part of what governance is. And many companies are completely exhausted by the time they're finished complying. Anything beyond that is just too much. But governance is like a religion. And every religion comes with rituals. We had them this just half an hour ago when we had our annual puja here. These are the rituals of a religion. But we do these rituals because we hope that these rituals will direct us to being good human beings, which is the purpose of every religion. So we think that if we have done the Satyanarayan Puja, we will be a better society because of what we have done. That is the purpose of ritual. By itself, ritual doesn't serve any particular purpose. It may serve a purpose to give you comfort, to relieve your distress if you have distress, so on. But we know of so many people who perform the rituals but do not practice the ethos of their religion. We know of so many people. And therefore, governance is like that. You can comply with all of the Companies Act provisions and all of the LODR clauses, and you may still not have good governance in the organization because you have the wrong culture, because you have the wrong purpose, the wrong objective for the organization. So you do the rituals without practicing the religion. And so governance and religion are very similar in that particular respect. So what then is governance if it's not compliance with the prescribed rituals of governance? And that is what I want to speak to you about today. I'm not going to talk to you about technical issues. Like before the session, Zubin told me somebody is going to ask you about the Prevention of Money Laundering Act. I said, look, there's an expert here. He will answer that. I have not read that act and I have no interest in reading it at this stage of my life. So I will not be able to deal with technical questions, but I would certainly be very happy to deal with the rest of the stuff that I'm going to say to you. So what is governance? See, governance till today has been framed to serve the purpose of the provider of capital to a business. All of the focus of governance, the entire design of corporate governance is to serve the purpose of the provider of capital. The provider of capital, which means the shareholder, is preeminent. And this was the case till very recently when we had the new act, the 2013 Act. And we'll come to that in a few minutes. But it's the 2013 Act that for the first time has put before us a different purpose of governance than merely what I would say, the maximization of shareholder value, because that was the purpose of all governance. The reporting, which is what we make our life in, drawing up financial statements, the manner in which a company is governed, who determines the governance, it's all decided by the equity shareholders. The law itself is defined by that. So the whole purpose of governance addresses one constituency. But in the political world, and how did this come about? How did this come about? When corporations, business corporations began to be active, and perhaps the first business corporation was the East India Company, you had a certain model of governance in political systems. And in political systems, the model of governance that we had then was that those who gave something to the sovereign, the king, in return received the right to have a voice in governance. So we had the estates of the various European countries, whether it's in France or in England or any of Scotland or anywhere, any of those countries. The estates were the parliaments, and the parliaments had three estates or three different bodies that were represented. The first and the premier estate was the clergy, the archbishops and the bishops. And they were there, and they had a right to tell the king what they think is good for the nation, because, and the king let them have that particular right to express their views, because they gave him legitimacy. That's how the old Brahmins, not the old Brahmins, that's how the Brahmins in our own nation had, because they gave legitimacy to the sovereign, they had a far higher standing than the others. I think right or wrong, this is how it was all over the world. The second estate or the second house was the lords and the noblemen, the barons. And these barons received the right because when the king wanted to fight a war, they provided him with the soldiers to fight. So they gave him soldiers, he allowed them to express a view. And the third estate or the third house was those commons who paid taxes. Mainly that means landholders. The large landholders were able to have the third estate. That's how later Edmund Burke described the media as the fourth estate, because he said they play as large a role in governance as these three estates or these three houses. And of course, in many of these countries, the three houses met separately, not together. And we have that even today in, for example, the House of Lords, which now has combined the clergy as the Lord's spiritual and the non-clergy, like our friend Lord Karan Bilimoria, as the Lord's temporal. So that's the House of Lords. And then we have the Commons, which was the rest. And this was true across the world. And one major event happened that changed the whole basis of determining governance. And that event was the French Revolution, when the third house took control, abolished the other two houses, cut off many of the heads of the people sitting in the other two houses, literally. And that is when, for the first time, people even understood that the purpose of governance is not a reciprocal transaction where I will let you have a say in governance because of what you give to me, but you will have a say in governance because whatever I do affects you. And so what we had was the universal adult franchise. That took a long time to happen, because even then adult franchise happened. It was restricted to individuals. For example, women didn't have the vote for till the beginning of the current, the last century, not the current century. So we had this transition from, if you gave something to the sovereign, you received a right, to never mind whether you gave or not. If the sovereign's conduct affected you, you had a right. So the poorest person with no land, no soldiers, no nothing, also got a vote. That was the huge change. But the corporates and the corporate laws were written when we were still before the French Revolution. And so when the corporate laws were written, the right to determine governance of a corporation was given to the providers of capital. And in those days, indeed, business also had labor and they had land. As you remember in the old, when you learned economics, at least when I learned it, there were three factors of production: land, labor, capital. Land was in plenty. The East India Company was told the whole of India you can have. There was no shortage of land. If you run out of that, you can go beyond India to the other bits of land, beyond India. Labor was in plenty, because every Indian could be caught and told, come and work in the plantations or whatever they were made to do. There was no shortage. The only shortage was of capital. And so capital was able at that point to snatch the preeminence in governance. And the corporate governance world has not progressed as has the world of political governance, which, as I said to you, in 1789 or 1790 was the French Revolution. So we are about 250 years behind. But as I said to you, in the 2013 Act, there is, for the first time, an indication of this. And in that respect, I would say India is perhaps the first country in the world to have looked at something, and I'll deal with that in a few minutes. So we have come to, therefore, the topic of stakeholders, because what is a stakeholder? Anybody who is affected. So we, for the first time, have begun to recognize that stakeholders should have a right in governance, not only equity shareholders. So this is the big change we are looking at. And if we look at only compliance as governance, then we are talking of only one segment of stakeholders, which is the equity shareholder. But we have now moved to well beyond that, to all stakeholders. And I'll just quote to you something I heard. We have recently, a couple of years ago, the International Sustainability Standards Board was set up. So there was a conference in London, end of June. And I'll just quote a sentence from what the chair of the ISSB, Emmanuel Faber, said at this conference. He said that the value that a company creates for its shareholders is inextricably linked with its business ecosystem. So it is not only because of the company and the providers of capital, it's the whole ecosystem. And he went on to describe the ecosystem in his talk as society, natural resources, and people, which means HR. And he made a very interesting observation. He said, till today, we were focused upon efficiency. And why were we focused on efficiency? Because efficiency addressed the issue of shareholder value. It did not necessarily make any of the other stakeholders happy. It only made the fellow who got dividends happy, because efficiency means more value in the company. So he says we have to move from that efficiency mindset to the resilience and sustainability mindset. And we have to accept that today companies need to address well beyond merely the issue of efficiency. So then we come to the point, why should providers of capital have preeminence, or why have they? And I just told you why that has happened. It's a matter of historic evolution. And as I said to you, we have now in our Companies Act the section 166. And I'll just, for those of you who may not remember it, read to you subsection 2 of 166. A director of a company shall act in good faith in order to promote the objects of the company. All that is not important. For the benefit of its members, which is, of course, the equity shareholder. In the best interest of the company, which is trite. I don't know why they have repeated it, ended. Its employees, its shareholders, the community, and the environment. And I think ours is the only Companies Act which puts the community, the environment, and other stakeholders on a level with the members of the company. It makes no distinction. Indeed, if you read the fourth schedule, which is the code for independent directors, the fourth schedule has a clause which says independent directors shall balance the interests of all stakeholders, making no distinction between shareholders and others. So we have moved the purpose of a company well beyond any other of the 200 odd countries in our world. I don't think anyone has done it as much as we have. But having done that, the Companies Act still suffers from the issue of how then should the governance achieve this noble view that has been expressed? Because the rest of the Companies Act is still as it was when the first act in 1857 was written. It still has the same, almost the same provisions. So you can see the difficulty that is right now being faced. And so what is governance today? At least how do I view my role in governance as an independent director or in any other respect? I view my role as persuading the people who have some voice in the organization to move from merely addressing one stakeholder to recognizing the interests of the other stakeholders, to begin doing that. And the difficulty we have is actually well managed by the other countries. And I'll just quote to you the provisions in the UK Act, which sort of preceded our act by a few years. And like all Companies Acts that have been written in our country, large chunks are stolen straight from the immediately previous UK Act. So if you read actually section 172 of the 2006 Act, alongside 166 of the 2013 R Act, you'll find big phrases and paragraphs have been straight taken out. So they have an equivalent of 166. But theirs has a very different spin on it. It says, companies shall, in making their decisions, address the interests of, and they list out the various stakeholders, community, environment, and so on, so that they subserve the provider of capital. So they have kept the provider of capital, the equity shareholder, on top, and they've said all the other stakeholders must be considered in every decision. Boards have to, in fact, they have to explain in their annual reports how their decisions vis-a-vis different stakeholders subserve the interests of the providers of capital. So the UK Act gives the same framework that we have had till now. Ours has gone beyond that. It has put everyone on a level. But then it hasn't given any other solution to how boards, managers making decisions have to see how they make a decision, because the interests of one stakeholder may not exactly coincide with the interests of another. Many times, this is not uncommon. Many decisions may be not so good for the shareholder because they are good for the environment or the community or something or the other. So that is where our challenge lies. And if as professionals, we want to bring in good governance, it's not enough to merely have compliance with the LODR and the Companies Act. This is where we have to start persuading company managers, controlling shareholders, why they need to move beyond where they currently are. Now, what are the significant principles you need to keep in mind? And our president made a reference to them in his inaugural short address. And I'll just repeat some of the items he said. The first principle is responsibility. Until today, our understanding was the responsibility of managers, managements, boards, everybody, to subserve the interests of the equity shareholder. But now we saw our section 166(2), fourth schedule, so on. We have to begin to address the interests of our other stakeholders. So responsibility to all stakeholders, not only the shareholder. Second principle, and I don't remember if you mentioned it, fairness. But that's a principle of good governance, fairness. Fairness vis-a-vis different stakeholders. Accountability, and you mentioned that. And how do you achieve accountability? By being transparent, by saying and declaring and openly stating, this is what my behavior is doing to you. Today, our financial statements ensure detailed transparency to the equity shareholder. There are several hundred data elements in any standard set of financial statements that are provided to the equity shareholder. To the other stakeholders, till now, we've had no reporting. Very recently now, the BRSR, some of you may be familiar with it, has been introduced by SEBI for the 1,000 biggest companies. And it has reporting to all the various stakeholders. So it has a few items for each stakeholder. It's picked out a few items, not all of them. And if you compare that to the hundreds of items that are reported to the provider of capital, then you can see the huge difference in treatment between transparency to the provider of capital and transparency to the others who are being affected by the behavior of a corporation. So transparency is an important element, sir. And you will notice that the BRSR is a first step. It has till this year been applied only to the 1,000 largest companies. And indeed, SEBI wants to increase the coverage. But the largest companies only cover a small segment of the total business world. There are many companies and non-companies who are outside the BRSR. So we are talking about the impact of business on the environment. It may be a corporation, it may not even be a corporation, but the impact of business on the environment. And if we want to address the new world, then the transparency to those stakeholders. And at the end of the day, the whole purpose of all of this is to earn the trust of these different stakeholders in the company, because today increasingly trust is paramount. Now, what caused this change to happen in the last, because we didn't have any of this 20 years ago. If we had corporate governance, it was, are we complying with clause 49, which had just come in I think 1999 or 2000. So clause 49 was our understanding of corporate governance. But what changed then? And I think three significant events happened in the last few years that have brought this change. The first was the Enron era, when we had a slew of scandals, which caused enormous doubt in the public mind about the integrity of corporate managers, business managers, and everybody who participates in a business, including the firm of Arthur Andersen, which ceased to exist immediately after the Enron specific scandal. But there were many other companies that at that time went under, huge corporations. The second was in 2008, the global financial crisis. And some of you remember that around the world, not in India, because we didn't suffer from that crisis, but in the Western democracies, there were huge agitations of what was called the 1% versus, or the 99% versus the 1%. The 1% representing these money bags and the 99% representing the rest of humanity, who said, we are outside. And if you remember, I think it was Goldman Sachs who was paying billions of dollars to their partners when the rest of the world was losing their jobs by the tens of thousands every day in the collapse of the global economy. So that was the second incident that shook up people. And the third incident it's not an incident, it's an ongoing event, is climate change. And increasingly, people are now becoming aware of climate change, and increasingly it is accepted that it is the world of business which is the prime, perhaps the only driver which is resulting in significant change in the environment. A change in the environment that over the next 100 or 200 years could threaten the very existence of human beings. So as I like to quip, what we could be heading into, and heaven forbid anything like this ever happens, we will all die, but we'll have a huge bank balance on the day we die. So we will have that satisfaction. So that is what the rest of the world is fearing. And these are the three key events or ongoing unfolding calamity that is bringing a focus upon the new governance, where you have as a business to think about many things beyond merely maximizing shareholder value. That is now an out-of-date thinking, because it is the maximization of shareholder value that has brought us to this terrible crisis. And indeed, any further focus solely on the maximization of shareholder value is an erroneous focus. Not only an erroneous focus, it's a dangerous focus. So what have been the various responses? All of you have heard of ESG. So I don't want to talk about it because it's just coming out of our ears now, ESG. And that's become another trick to fool people, what they call greenwashing. So we have people who are egregious in their misconduct, but they claim to be ESG compliant. In India, as I said, we have had the BRSR. A similar thing, when the International Sustainability Standards Board was set up in Glasgow 2 years ago, it was also asked to prepare standards addressing ESG. So all stakeholders. Their first standard was issued just a few days ago, and some of you may have seen it, S1 and S2. Two standards have recently been issued, and both of those address the environmental impact of business. And what the standard says is it's a measurement and reporting standard, just like we accountants do in our financial statements. So it's measurement and reporting for the other stakeholders. It's a somewhat limited standard. According to me, the amount of things we are expected to measure and report are limited, but it's a huge change over where we were. And this, if some of you have been dealing with this, would have known that there were a number of different standard setters. Many people jumped into this thing. So we had the Value Reporting Foundation, and they had two standards, two sets of guidance: integrated reporting, and many of our Indian companies adopted it a few years ago when SEBI said, also give an integrated report. So many companies adopted it. And they had the Sustainability Accounting Standards Board. Then the TCFD, some of you have heard of the TCFD, the Carbon Disclosure Project, the CDSB, Global Reporting Initiative. All of these now have been subsumed into the ISSB. So now we have only one standard setter for not just sustainability in the sense of the environment, but sustainability for all stakeholders. So it's addressing every stakeholder. One of its projects is on your personnel, HR. So it has a number of projects that it's addressing. Now you may ask, what do we do in India then? Because one is measure and report. But measuring and reporting is only the end product of what you do, your behavior. So what should you do in your day-to-day behavior to address stakeholder interests? And every company needs to reflect upon this. And there is a simple set of things when you reflect, consider it. Most companies are not even aware of who their stakeholders are or how their stakeholders need to be segmented. Because you may say, my suppliers are one class of stakeholders. Of course they are. But if your supplier is Tata Steel, and there is also a supplier who is the local little boy down the road who supplies you stationery, they're two completely different classes of stakeholders. You can't treat them both with the same brush. Just as you can't treat the controlling shareholder who has 70% of your shares and the little guy who has 100 shares with the same brush. There are different treatments for them. So similarly, companies need to consider who their stakeholders are. Who are the stakeholders who are most at risk by the behavior of the company? Maybe the way you behave with your suppliers, it may not even tickle Tata Steel, but the way you behave with your suppliers, for the little guy who's giving you stationery from down the road, it may mean a difference between his survival and his closing down. So we need to address who are our stakeholders. We need to address the issue of what their interests are. Because remember, the law says the interests, not just the legal rights. So it goes beyond legal rights. It says the interests. Your supplier may want to grow with the company. He has no legal right to claim that, but it is his interest that the company is growing. I would like to also get a share of that growth in the business I am being given. So we need to reflect on what the interests of our different kinds of stakeholders are. And there will be varying interests. How will we measure those interests? How will we measure that we are actually addressing those interests? And this year we have done better than last year. So what measurements will we use? And they can't all be rupee measurements. Some items can be measured in rupees. But if I talk of the environment, or if I talk of my impact on my community, it's not rupees that I can measure it with. There are other measurements that I may need to think of and develop. How would my own policies and processes change so that in every decision we make, these are considered? Today, we have refined the process for shareholder value in every decision because we always address the financial impact of every decision. If I do a purchase, I say L1. If I do a sale, I say, am I billing at as high a rate as I possibly can, etc., etc. On major decisions, we have developed many tools. Discounted cash flow, payback period, all these different measurement tools have been developed for addressing shareholder value. We have to think what measurements we are going to use for these different stakeholder interests. There has been no progress on this. I remember some years ago speaking at an event in Amsterdam. There was a room full of academicians, doctor of this, doctor of that. So you would think they would have been thinking on this, and the topic was this. So I asked them that, is there anyone in this room? Please put up your hand if you have been thinking about the measurement of different stakeholder interests, and more important, when a decision is made, how do you apply the tiebreaker? Because it's going to affect this stakeholder positively, it's going to affect that stakeholder negative. This will be measured in rupees, that can only be measured in carbon dioxide in the air. So how are you going to decide at what point will I make the decision this way or that way? They are two completely different. If they were all in rupees, it's easy. And of course, nobody had done any work on that. And I don't think anyone has, even in the last about 5 or 6 years since I had asked that question in Amsterdam. Disclosure, now already a little bit of disclosure is happening, the BRSR, ISSB, so on. So around the world, we'll be seeing disclosures. Engaging with different stakeholders, not engaging only from maximizing shareholder value point of view, but from asking the stakeholders, what are your interests? What are you wanting out of us as a corporation? What can we do for you? Are we doing it? A satisfaction survey from that perspective. Ultimately, the organization must have that culture of being sensitive to other stakeholders. And that has to start with the controlling shareholder, the board, and obviously the managers. And as a professional, it is for us to begin to put these thoughts into the minds of controlling shareholders, boards of directors, and managers. Because if we don't do it, who is going to do it? We are the people who have the highest amount of influence over people like these. And if with that influence we don't succeed, and you can be an auditor, you can be a tax advisor, whatever, as Gandhi said, create an opportunity to raise these issues. Don't wait for an opportunity because it will never come. If you're going to give tax advice, it's unlikely the CFO is going to ask you, what do I do to improve governance in the company? So you will have to somehow steer the discussion to that. But I think we all have a responsibility. It's not just a role. It's a huge responsibility, as I said to you. Today, we may be looking at a threat to the existence of human beings. So it's not a small thing. It's a huge issue, which I would like you all to focus upon. What else can you do? I told you about stakeholders and so on. I went through a list. There is I must look at this because I forget the full names, the science-based target initiatives. And I know that there's about maybe 150 Indian companies who have signed up on this SBTI global initiative. And what it says is companies who are signing up on this will have to provide plans about how they are going to reduce their impact on the environment for each environmental impact point. So take carbon dioxide, that your business is putting so much carbon dioxide into the air directly, as also through the products and services you purchase, and through the products and services you manufacture and sell. So the total cradle to grave, as it were, impact of your business. And I'm giving an example, carbon dioxide impact. So it's not enough for you to say, okay, I'm working on reducing it. You will have to have a scientifically justified action plan by which you say, by 2030, I will reduce this by 80% or 70% or whatever percent. And every company by 2050, the SBTI requires, has to bring it to zero, the impact on the environment. And if it's a kind of business which cannot make it zero, there is just no way, there are certain businesses you can't make it zero, then you must do other compensating projects like planting trees or whatever, which will compensate for that amount which you are unable to address. So that's what SBTI is. And I see a number of Tata companies, several others. Surprisingly, most cement companies in India have signed up for this initiative, and cement manufacture is one of the most dirty, environmentally impacting business. Several have signed up. So, and increasingly, people who come to you, if you want employees, increasingly young people are asking these questions. Fuddy-duddies like me may not, because we don't understand it and our life is over anyway. But the young people are very cognizant of these issues. So if you want to attract bright young people, you'll get dull young people who have not thought of all this and it doesn't bother them because they're dull. But which company wants to hire dull young people? And if you want to hire bright young people, I can't think of a single individual who is bright and is not aware of these facts and who will not be attracted to a company that puts it in their forefront, doesn't use it only to put lipstick on their outward look, but to be behaving and doing what they claim they are. So in conclusion, and I think I'm about, because I'll be happy to take some questions, I would say there are three things. If I was an advisor, I would say to a corporation, to its CEO, controlling shareholder, whatever, you must take responsibility for your behavior and its impact on the different stakeholders in your business. You must take responsibility, and you can only be responsible if you disclose to them what is the impact of your behavior. Because if you hesitate to disclose, what you are doing is therefore not behaving as you say you are, because you are not prepared to tell people what your real impact is. So disclosure. develop a plan or a roadmap. If you want to get to this, like the Science-Based Target Initiative, have a plan. It may not be an SBTI plan, because the SBTI plan also includes an external audit, a technical audit. They won't send chartered accountants because they may not be the right people. A technical audit to see whether what you are professing is achievable. So you may not have an audit, but at least develop a plan to get to where you want to be. And that the SBTI initiative is in the context of the environment. But you can have a similar initiative for each of your stakeholders after identifying who they are and what their interests are. And as I said, finally, measure, report, and reward your management based upon their achieving all of these different ESG targets. Till today, most senior management are rewarded by what? The amount of financial contribution the company has made, the bottom line. So if the profits have gone up so much, that has a huge weightage in any performance-based incentive to a senior manager. Introduce these other responsibilities into the senior manager's rewards. Automatically, you will see that they will start getting addressed. So as I said to you, measure, report, reward. So there are three closing thoughts that I want to leave you with. This is not exactly the kind of talk you might have thought, Mr. President, that I was going to give. but I am not good at technical things, or not I'm not good, but it's just something that doesn't excite me. What excites me is speaking in a on a principles basis. So with that, I'll be happy to take any questions from those who are here. And I don't know if there is a method by which those who are not here can also ask their questions. Yes, ma'am.
So it's always insightful to listen to you. I mean, it's amazing.
No,
Thank
you have
you.
to ask questions, not
Yes.
make statements. Huh?
Okay. So my question is, any thoughts on the capacity building?
She's got the mic, ne? So it will go in there. Mic, yeah.
Thank you. So any thoughts on capacity building? Any thoughts on, like, as you rightly said, the industry is steering into new stakeholders, into measurement, into reporting. Any thought on the skill gap? Any
Very
thoughts
good
on-
question. I think it's an
Thank you.
excellent question. I have not seen anybody who is building capacity here on a holistic basis. There may be a lot of people who will give you advice on filling up the BRSR, stuff like that. But on a holistic basis, I have not seen anyone do that. So if no one will do it for me, I must do it for myself. And so the role of each of us as professionals to tell people how they can do it for themselves, it's a thing in which we'll all have to hold hands and feel our way forward. There is no path that has been laid out. But each of us will have to do this in our own way to move forward.
Sir, I have one more follow-on, if I may.
Yeah.
How do you see industry looking at the capacity building? What would be their insights?
See, this is, it depends. There'll be companies who are today having commitment to some of these things. Many times they're not very sure what commitment implies. They're not very sure. But at least there are some who have a commitment, and perhaps they will be happy. For example, I remember about a year ago, I ran a program for Tata Motors on this topic. So there are where I sort of said something like what I said today, much more than in detail than this. So there are companies who seem to have an interest, and it's best to start with the easy wins. So if there are companies who are interested in this, maybe you will get a more positive feedback. There'll be many who will not be interested, but you have to keep chipping till you get the granite to slim down.
Yes. Thank you. Thank you. Sir.
Thank you.
Sir, there are a few questions from online
Oh,
participants.
very good.
One is on, in the recent time, the government has come down very harshly on the independent directors and held them liable for even the smallest of the misgovernance. This has dissuaded many professionals from taking up such responsibility and is not an encouraging reflection on the future and importance of governance. How do you think our profession should address this situation?
I've got a facetious response to this question. According to me, there are many companies that should never have taken money from the public because they are foisted with independent directors because they went and took money from the public. But their behavior was never intended to serve the interests of the public. Their behavior was totally self-interested. The controlling shareholders' behavior, was totally self-interest. And so, if these kind of companies take money from the public, they have perforce to have independent directors. And if you then agree to be an independent director in a company like this, then be it on your head, because you have enabled them to take money from the public. So you deserve to be taken away to prison if you have not served your purpose. Because remember, being an independent director, and I can tell you with 25 years of experience, a lot of time is involved. I don't know how there are people who sit on several public company boards and at the same time manage their own practice or something else that they do. I just can't comprehend it. I couldn't sit on more than the boards of 2 listed companies at a time. It was just impossible because all of it is compressed, remember, in more or less 1 month every quarter. And there's a lot of engagement right through the remaining months. It's not as if the rest of the time you forget. So I don't have any sympathy for these fellows because they've enabled wrong people to enter the market, take money, because they've enabled it. If every person said, no, I will not be independent director of such a company, the company couldn't have become listed. So it's a facetious response, but this is the reality. Yeah.
Another question is from our past president, C. Abhay Mehta. He says ESG is looked upon more to address E part of the issues, which is definitely a serious one. However, don't you think that the focus should also be aggressively on improving the S and G part of it?
I fully agree with that. I fully agree with that. And I think even the E1 is not really being adequately addressed because of the seriousness of what the E1 could have caused to happen to us. But I agree with Abhay that that society, and actually it's a strange collection, this ESG. This is Kofi Annan had set up a committee in 2000, and that committee came up with this thing because if you see E and S, these two are environment and society are stakeholders. Governance is a process. So they've bundled it all as ESG, but G addresses the E and S because as my 1 hour talk, in fact, this is what I said. So yes, I agree with Mr. Mehta's leading question, which I couldn't disagree with. Yes, then that's it. Oh, yes.
Sir, we had misfeasance, malfeasance, defeasance, and non-feasance in our old Companies Act as well as we have in the new one. Now, as you explained to us that governance concept has now been enlarged from merely shareholders to other stakeholders. So do you think that other stakeholders can throw challenges to those who are in charge with governance with the proceedings for malfeasance, non-feasance, defeasance, and misfeasance?
See, fortunately or unfortunately, depending on your point of view, the law does not enable this. The law which enables, now I'm getting old, I've forgotten the legal term, where 10% of shareholders can represent the remaining, but there is no, it doesn't matter, whatever. The Companies Act provides for a group of shareholders to move the courts against management and the board if the interest in their view of the remaining stakeholders is not being addressed. All others, I can only go and file my own case. So I can go to the court, but I can only speak for myself. So once I asked Greenpeace, I said, look, now all this stuff has come, environment and all. And this I asked in 2013, 14. Are you going to start suing companies? And they said, we have no locus standi. If we go to a court, we will be turned out. That you don't have a locus to come to us with this issue. That so if you remember, at one time, Greenpeace had gone and hung a big banner on the SR building in Mahalakshmi about 25 years ago, 30 years ago, perhaps, a big banner about their I think their Singrauli project. But that's all they can do, hang banners, agitate outside the office, but they are not able to class action. Class action is
Torts.
Huh?
Torts, law of torts.
But
These
tort,
are-
yeah.
Yeah.
But tort on behalf of representing a group of people.
And second question, sir, can we have challenge from NFRA in respect of governance?
I don't know. I am not a lawyer. And since I gave up being an auditor many years ago, 20 years ago now, I have not bothered about NFRA, but I don't think so. I don't see how it's in their remit. Never mind NFRA, even SEBI cannot. SEBI's remit is the capital markets. In fact, I'm surprised they have even introduced these other ideas because they have no remit. That can in fact be challenged. That who are you to tell us about environment? Your job is capital markets.
Thank you.
The Company Act can, of course, Companies Act. Yeah.
So on SEBI, the SEBI's new requirement for independent assurance and regulatory rating with enhance the credibility of ESG disclosure. That's what they are claiming.
Yeah.
Sir, what is your views on that?
See, my view, actually, to be absolutely honest, is every little that can move the needle, we should be doing. Now, when you get to my age, and in fact, some of you in this room are nearly there, you tend to get cynical with life because you find that, we were told at one time, what minimum government, maximum governance. That was forgotten a long time ago by the pronouncer of this, this particular thing and by subsequent conduct. So like that, we all become cynical. So we say, oh, this SEBI, kuch nahi hoga iska. Everything that even begins to get people to start thinking about their responsibility to other stakeholders is moving the needle in maybe only 1 degree. So that's my view on that. Anyone else online or here? Because otherwise we can all go home and eat dinner. Actually, there's still time. Yeah, we got 25 minutes.
One question is on, should CSR expenditure be first towards bringing neutrality on environment?
See, each company has its own philosophy. And you will see most companies are focused on education because they believe it's necessary. And of course, it's necessary. So most companies do it on that. The second lot do it on health. The third lot do it on some amount of women empowerment and that kind of thing. I have not seen a great deal of emphasis on the environment or on non-humans. Like, I am very committed to an animal charity. In fact, more or less I run it. And I have never been able to raise any CSR money for that animal charity. Everybody says, abhi koi human beings mein koi kam mauka hai ki tere ko kutte billi ko dena hai. I feel very insulted on behalf of the animals. So I think each one has to decide their own philosophy. I think if they did it on environment, good, but I doubt they will. Then you have to talk in that thing.
I had a question. In your vast experience, have you had the chance to move the needle as you said. And how have you gone about doing it?
Very good question again. Very good question. These women are asking good questions, which is a very sexist observation. I shouldn't make them. Not very successfully, because it's a question of changing mindsets. And for example, I have been on the board of a company where the controlling shareholder is committed to this. But the controlling shareholder says the market will not give us value for this. They say, oh, very nice, you people are doing all of this, and they're happy with our public posturing. But if that begins to affect, at least in the short term, the bottom line, I don't know how to deal with that. So this controlling shareholder, I will not say he or she, for obvious reasons, finds it difficult. This controlling shareholder finds it difficult to persuade the managing director of the company to respect, though the controlling shareholder has well over 60% of the capital. The managing director says, I don't know how to do all this. I only know how to make more money. Don't ask me to do this. So of course, I have tried even harder than the controlling shareholder has. Oof, this is very difficult if I'm to not mention he or she. So I have prepared a roadmap, etc. But what I'm not able to convince my colleague directors is, or have not convinced is this should be part of the measurement of his performance bonus. Because the minute we do that, this managing director will discover how it's to be done. Till then, why would he want to do something new? So I've not been successful. Not enough. Some success, yes. For example, the company was constructing a building. And, they said, these are the plans, very nice architect's drawings, etc. Factory. And it will cost us, I forget now, 68 crores or something. And I said, how much carbon dioxide will come out of the cement and steel that is being used? And can you modify the design? And I give several ideas. I'm a retired auditor, but I give several ideas on how modifying the design will save the amount of carbon impact. For example, I said, put all the lavatories, pantries, etc. on the west so that they face the afternoon sun. Air conditioning is not used up because you need air conditioning in the main offices and plant. So just simple solutions. And they did all of that. The cost of the factory went down by 2 or 3 crores. And the long-term impact, because it will use less air conditioning, so less electricity, was even more than that. So there's some things you can get, but you have to be a little more specific. Sorry, you have another question.
So do you think, like, just as we had, some industrial houses which went into philanthropy when there was no CSR?
Yes.
Now you have CSR, so you have corporates having to do that.
Yes.
Do you believe that having a regulation which would require them to say contribute an X percentage to changing the environment or bringing out the required change help? Because as you said that most of the focus areas remain education, health, so on and so forth. Environment is somewhere down on the list.
I don't think every time asking people to spend more money on something specific is going to be the solution. More is to say how you are reducing your impact, and if you are not reducing it, is there a consequence? But I'm sorry to say the government is moving in the opposite direction. At least our government. It's the governments in Europe which are much more committed to this, I must say. Not America at all, and nor our government is at all committed to a thing like this. They're on the contrary, they're going in the opposite direction.
Sir, we have an online question.
Yes.
It is about the assurance service. It says, do you think chartered accountants are more suitable to carry out an ESG assurance vis-a-vis the other professionals like lawyers, company secretaries, and even environmental experts who claim the right to be auditors?
this has been a behavior of our, I can't say of our profession. I don't think our society behaves like this. But I'm sorry to say that our head body sometimes behaves like a trade union. And so it claims its reason to exist for the amount of work they have generated for their members. But we exist because we serve not our members, but society. In the old days, it was just the shareholders. Today, it is more. So the first thing is not to rush after everything that, how do I increase my business for my members? I think that's a very, very narrow-minded way of looking at, like a trade union way of looking at your role. And I use this particular description from what a former president of the institute told me about 30 years ago, that the council now behaves, or the president behaves like as if he's the head of a trade union. He claims we got sales tax audit in Kerala, big thing to boast about. It's very unfortunate. Anyway, and I think end of the day, any profession will be respected and will survive if it does what it is competent to do. But if it starts doing things it's not competent to do purely out of greed, it will be the death knell of that profession.
So you had specifically exclude certain part of it, and therefore I would explore this question. Would PMLA and terror funding be part of ESG?
Excluded. Where is the PMLA expert? He's gone away. Oh, no, I can't answer this question. I have no idea. I said it in the beginning, whoever is asking this. No. There is a question there.
Sir, there
no
are
questions.
so there are pollution control boards in states. So currently, how their alignment with ESG will move on in near future if there are pollution control boards and ESG also?
Pollution control boards now have been for many years, and I must say they are getting tighter and tighter. Now a lot of pollution parameters are measured online and reported real time to the board. So if I run a power station, second by second, the pollution control board sitting wherever it sits knows exactly how much carbon dioxide is going out of my stack or how much heat is going out of my stack. Real time, they have the information. So it's good. And what it plays into in ESG is in those parameters, at least there is some amount of control. But today, the purpose of ESG has moved beyond only the thresholds that are set in the law. Today, the crisis is so great that we have to have power stations that don't generate any carbon dioxide, which means wind and solar. So the whole focus has now moved to beyond mere meeting pollution control law thresholds. Then there at the back.
Sir, out of curiosity, I just Googled what are the biggest corporate governance failures. And the list that I got are all the financial frauds.
Yes.
So are there any examples where, because a lot of concentration is more on the financial frauds, which are basically talking about the shareholders' breach of trust.
Yeah.
So are there any examples of failures of the corporate governance which the government is taking seriously, where the shareholders are happy, but probably the other two areas are getting affected in your experience?
The other areas getting affected. Look at when all these financial firms fail. Well, at least I can talk of the in America, for example, or in England. They were all bailed out by the government using society's money. And in many of them, the shareholders got their value out. And it's ultimately the society which bore the cost of this conduct. And even if they are not bailed out, the very fact that public money is in the banks, which is going on, which is, you read this every day. So I don't want to belabor that particular point. I don't know if that's a good enough answer, but that's what I could think of standing on 2 feet. Yeah, Vijay.
So specifically for energy, it is being said that, all the climate change, what has happened is not because of what developing countries have done, but what developed countries have done. And now they are imposing all those, they have been benefited, and now they are imposing all those conditions to developing countries or underdeveloped countries. And what is your view on this? Because they've developed, they have actually spoiled the climate.
Yeah, I agree.
But they want all the countries
agree.
to,
I
pay.
fully agree. I fully agree with you, Vijay. See, it's, I forget now the numbers, but you see, when the Industrial Revolution started, the amount of carbon in the air was 250 parts per million. During that revolution and the 200 years since the revolution happened, that number, and it was 250 parts per million for thousands of years. That number has gone up to about 400 and something. And they say the tipping point. And what is a tipping point? A tipping point is, if it goes beyond that particular point, nobody can say what the effect will be. There is no ability to predict, because the weather and the environment will behave in an unpredictable way. So the tipping point is some 480 parts. So we are already very close to it. And if we don't at all change, I think in about 10 years, we will reach the 480. So we have to change. Now, there is no gainsaying this fact that those fellows benefited at our cost. But I have 2 points on this, 2 views on this, Vijay. The first view is, if I look at it from this developing versus developed economies, is the developed fellows pushed us to very near the precipice? It's their fault, of course. But I want my right to also keep pushing. Never mind if we fall over the cliff. But I was deprived of this right. You fellows enjoyed pushing us to the brink. But I will also push. It's my right to push. Never mind if it's suicide. But I will not surrender this right. So that's one response I have. But the other response I have is that it's not developing versus developed. Mr. Ambani's home, which overlooks mine, must be producing more carbon impact than 1,000 US homes of the middle class. So it's not a question of developed versus developing. It's a question of the rich versus the rest. Each of us has a carbon footprint which may be much larger than the carbon footprint of a large proportion of poor US families. But because you just put everything together and say developed versus developing, the average US family produces about 19,000 tons of CO2. The average Indian family produces about 4,000 tons of CO2. But we're not talking of only, so, averaging it out means all of us can continue to behave the wrong way. Because we are protected by the crores of poor Indians who have no footprint, never mind carbon. So therefore, it's every one of our responsibilities. And I have not mentioned this, but now you're tempting me to mention it. We must all reduce our consumption. It's no use blaming the power companies or the car companies or the oil companies. They make the product and sell it because we use it. If we stopped using it, they wouldn't have to make the product and there would be no impact. So ultimately, there is a demand side and a supply side. All the focus is on the supply side. This is a capitalist trick, because keeping it on themselves means they have control over what they need to do. Even addressing the environmental impact is an opportunity to make money. But if you move it to the demand side and tell all of us, consume less, they have no control, they lose their market. So they don't want any focus on this. So you will not see any global body addressing this. If you raise the point, they'll say, oh, it's too late now. To make 700 and 50 crore people behave differently. When we are facing an emergency, every push on the brake is worth it. But they will not allow this. You know, I grew up in Calcutta, so I think in certain ways which most people from Bombay will not be able to understand. Yes, then are we at an end?
One
We have-
question
Huh.
where the participant is asking, what is your advice for the internal audit fraternity as to how they can contribute to the ESR initiative in the company?
This fellow who is asking this question should have attended that 10 days ago. We had a whole day conference, and my opening address was on this topic. So I'm not going to now give another 1.5 hour address. Khatam. Chalo. Thank you all.
Thank you, sir, for the wonderful address. And I think one of the interactive session, we have a theme of reimagine. And I think people have started rethinking about the role of governance, not only about compliances, but also environmental and social as a part of it. So a great interactive session. And now I would request Zubin Bhai to do the honors for the vote of thanks.
A very good evening to one and all. Before I get on to the pleasant task of a vote of thanks, some of the announcements for the forthcoming events. Starting Friday 14th, we have a event organized by the Direct Tax Law Study Circle on intricacies and issues relating to reassessment. Then the Indirect Tax Law Study Circle on the following Friday, 21st July, casual taxable person and non-resident taxable person, its practical utility, difficulty, and transgression. Both these events are virtual events. Another event again by the Indirect Tax Law Study Circle on 3rd August. Has the GST road built the way to drive it easy from an automobile industry perspective? Then there is a suburban study circle meet on important amendments in tax audit for trusts and NGOs. Again, a very hot topic on Friday, 4th August. Friday, 18th August, Direct Tax Law Study Circle issues relating to deduction under capital gains. Again, Direct Tax Law Study Circle, 1st September 23, key changes under the TCS provisions, the tax credit at source. And as our president mentioned, the final icing, not the final icing on the cake so far, the Reimagine 75th year mega conference, which now I'm sure all of you know, that is there from the 4th of 6th. There are a lot of early bird rates which are there till our Independence Day. So please avail of those. That is at the Geo Convention Center. Now coming on to the pleasant task of a vote of thanks. What can one say about CA Nawshir Mirza? He has not only talked about the role of governance for professionals, but in the end, I think a very important message which he has given is also to us, though we may be professionals, but a message in our capacity as individuals and consumers, that we need to be responsible consumers. I think that is the most important message. The way he has traced the journey of corporate governance, which is actually a very dry and serious topic. He has really dealt with it right from the time of the Industrial Revolution, East India Company, the French Revolution, the full journey, and how really it has evolved from maximization of shareholders' wealth to really the maximization of the interests of all the stakeholders. Certain interesting insights he has given about our Companies Act, which reflects that some of the laws may be there, but it is the actual implementation of the laws, I think, which is very important. And that is where our role as governance professionals and the journey of ESG. I think that is also fascinating. Sir, you mentioned that the address is not at all technical, but there are certain important, at least new technical things which I have learned. For example, the science-based target initiatives. I think that is a new thing, new concept which you have brought out. I'm sure that is a very technical thing. So that is a new concept. So all in all, I think it was a very interesting insight, as was on expected lines and much better than that. So you certainly have been able to substantially exceed our expectations. So please request you to carry it through with a loud round of applause. Thank you very much. May God. Yes, I would now request our past president, CA Chetan Shah, to please present a photograph, which is our tradition. Yes, now we will use this. This will be replaced. Okay, thank you very much once again. May God bless all of you and may God bless our BCAS. Thank you.